You can run a flawless business for a decade, but all it takes is one unpredictable event, one angry contractor, or one slip and fall to threaten everything you've built. Most entrepreneurs default to a single LLC or a sole proprietorship. It's built for simplicity, one legal framework and one tax return, where your storefront, your rental properties, and your personal savings all flow together. But if a tenant suffers a severe injury on your property and files a lawsuit, that legal entity, the one holding all your assets, is the primary target. In this single entity structure, the vulnerability is total. A crack at the bottom doesn't just affect the storefront. It drains your cash reserves, forces the sale of your real estate, and wipes out your personal savings simultaneously. To reach true financial invincibility, you have to change the math. You need to decouple your legal shield from your tax engine, ensuring your hard-earned assets and your daily business risks are never in the same bucket. The solution is a multi-tiered legal architecture. Instead of one vulnerable bucket, we build a compartmentalized three-tier hierarchy. At the base, we have Tier 3, the subsidiaries. These are your public-facing, high-risk operations. They sign the commercial leases, hire the employees, and take on the daily liability. By design, they hold zero long-term wealth. All the profits they generate flow immediately up to Tier 2, the holding company. Think of this layer as a sealed steel vault. It conducts no public business and signs no external contracts. It exists strictly to own the subsidiaries below it and safely pool their capital. At the very apex sits Tier 1, the family trust. This is the ultimate beneficiary of the entire system. It dictates who controls the wealth and bypasses probate court, operating completely shielded from public records or operational scrutiny. By dividing ownership into these specialized layers, an attack on your storefront hits a hollow shell, ensuring the trust that pays for your family's future remains untouched. Let's track how capital actually moves through this system. The architecture is engineered for liquidity flow. Cash generated by the operational subsidiaries travels cleanly upward into the holding company vault. This upward transfer happens without triggering massive corporate tax penalties because of specific IRS designations. By electing S-corporation status for active businesses to optimize payroll, and using disregarded entities for real estate, so profits pass directly to the owner's tax return, the cash moves smoothly to the top. But what happens when things go wrong? Let's track the liability flow. Imagine a massive, multi-million-dollar lawsuit struts one of your real estate subsidiaries at the bottom. Opposing counsel will aggressively trace the ownership upward, attempting to bypass the subsidiary to reach the pooled cash sitting in your holding company. Because we established absolute legal compartmentalization, the attack hits a wall. The liability is quarantined strictly to the assets of that specific subsidiary. The threat shatters and the vault remains secure. A resilient corporate structure acts as a financial one-way street. Profits flow freely upward, while legal threats hit a dead end. There is one human error that will instantly destroy this entire legal fortress: sloppy administrative habits by the owner. The most common mistake is commingling funds. This happens when an owner uses the holding company's bank account to pay a subsidiary's contractor, or uses a business debit card to buy personal groceries. Another fatal error is sharing a single employer identification number, the corporate equivalent of a social security number, across multiple distinct businesses simply to save time on paperwork. When a judge sees blurred lines in your bookkeeping, they will execute what's called piercing the corporate veil. They rule that your separate companies are actually functioning as one giant bank account. The legal shield instantly collapses, tethering all your protected assets directly back to the lawsuit. To keep the shield intact, you must operate with military precision. Every single entity requires its own distinct bank account, a unique EIN, and rigidly separated bookkeeping. Asset protection is an active daily discipline. Maintain those financial boundaries, and your operational companies can take massive, aggressive risks in the market, while your personal wealth rests permanently out of the blast radius.